There we all are. Well, thanks to everybody for listening in and giving us a little extra time to get ready. As you can see, we managed to get a panel in here of some distinguished colleagues and do them all in person. So we thought that was important for the purposes of this conversation. I'm Barry Finkelstein. I'm with Al Grant. I head up business development in North America, and I'll be moderating this panel on digital payments and privacy. I'm going to ask each of the panelists to introduce themselves, give you a little background on themselves and their institutions, and then we'll get right into the meat of the conversation. So I'll start with you, Eric, and then just pass it down the line to Mike Dersham and to the rest of the round.
Sure, sounds good. Thanks, Barry.
Yep.
I'm Eric Kriske, CEO and co-founder of Bidali. We're a blockchain or banking as a service and a payments provider that's using cryptocurrency and blockchain technology to reduce fraud and improve financial access.
Thanks, Barry, for having me today. Michael Dersham, aka Dersh. I'm CEO of MAPay, global healthcare fintech company, U.S. based just outside of Philadelphia, and our global headquarters now is in Hamilton, Bermuda.
Great. I'm Adam Hoffman, CEO, founder of Nimble, decentralized and democratized insurance. And we're in Boston, but we also have a setup here in Hamilton as well.
And hi, I'm Justin Newton. I'm the founder and CEO of NetKey. We do digital identity and know your customer work for a number of companies across the cryptocurrency and the blockchain space. I'm also the author of a Bitcoin standard, BIP 75, that deals directly with identity, privacy, and compliance.
Great. So obviously, as hopefully those of you out there in the crowd can see, we've got a lot of different folks to touch on a lot of different things within the payment spectrum and the privacy spectrum that we'll now endeavor to touch upon. So let me throw it out there to the panel. I'll ask Eric, and perhaps you can address this first and foremost. Digital payments isn't a new concept. It's been around for a long time. Basically, anytime you're thinking about movements of money that don't involve taking a greenback, if you're in the U.S., out of your pocket and sticking it in somebody else's hand in order to buy a good or a services, you're probably using some form of a digital payment, like a credit card for that matter, or your phone or something along those lines. But blockchain has clearly brought it to a whole new level. And what I was hoping you could do is sort of talk about those changes that have come upon because of blockchain, the efficiencies that it's brought and can bring, as well as talk to some of the compares and contrasts of previously more perhaps well-known forms of digital payments, things like Venmo and PayPal and the like. And so what we can expect to see and kind of touch on each of those different elements. And then we'll kind of pass it down the line to anybody who has anything else to add.
Sure. So I think, you're right. We've had digital payments for quite some time. Bermuda and other parts of the world, I think, are still adopting newer forms, or still have challenges in adopting newer forms of digital payments that we may enjoy in the United States or Canada, Western Europe. Part of that's a lot has to do with the banking rails that back it. I think the real opportunity with blockchain, or distributed ledger tech, and the programmable and verifiable nature of cryptocurrencies, I mean that in the pedantic sense, like cryptographically secured currencies on these networks, is that it gives you that verifiability and that programmability that we haven't had before. And I think the real opportunity is that we can enable a real-time gross settlement system that's global in nature. Maybe even real-time net, which can bring really huge efficiency gains to the flow of capital and global trade relationships. Most people don't, and I didn't know this when I first kind of got into this space 7-8 years ago now, but I didn't really understand how the banking system worked. And especially for cross-border payments, the settlement between countries involves a lot of counterparties, a lot of counterparty risk, as well as a lot of inefficiency in the liquidity movement around the world. And I think this is what we kind of see even little bits of in DeFi already. And with things like stable coins like Circle, is you're already seeing a lot of these efficiencies happening between businesses that are utilizing this tech and effectively acting like a real-time gross payment rail. And I know even for our business, like we make heavy use of USDC. And because of that reason, because it's dramatically reduced liquidity requirements between us and our counterparties, and enables us to do business 24/7, 365.
And so you touched on two things, and one I was going to ask Dersh if you could kind of speak to, because you talked about lots of different hands in the till that have to get paid. But one of the things that always strikes me is that existing payment systems that people know of, as I say, Venmo, PayPal's, they're digital, granted, because you don't see money going back and forth. But what perhaps isn't known to the common man when they're using it is that the transaction isn't really final. So it's happening, but it's really no different than if you had given a dollar bill to someone. That transaction isn't actually final. It's not really in your bank account. And so with the advent of the blockchain, we get things like atomic swaps, something I can speak to if you give me the forum to be part of Algorand. But when I think about that, and Dersh, maybe you can comment on this, what it allows
Atomic
you,
swaps.
well, not on atomic swaps, but the fact that the payments are final and that they are crossing not only between people, but across borders, and there is no banking institution delay, if you will, or other middlemen in between that have to settle these contracts and also, or anyone else on the panel. But
Yeah, I think you bring up an excellent point, Barry. We've talked about this before, because our business, and as I mentioned, we're a healthcare fintech company, so we're in this medical commerce space, right? And what I say is that medical commerce is different than any other type of commerce. When we're talking about the friction that happens in regular payments and digital payments, what that can do. In medical commerce, that claims processing, when you go to the doctor's office, right, and you see that bill that comes and all that back office that has to happen with your insurance company or government payer, that adds about 20% to the cost of care. So just to give you an example, here in this country that we're sitting in, which we're going to fix, but they do roughly about $800 million worth of healthcare spend. 15% of that goes cross-border. Simple math. That's upwards to $160 million that's going to the adjudication of claims and moving that money, right? So where we see, our specific area that happens within blockchain and smart contracts is if we can cut that administrative burden through a more automated smart contract adjudication, we can collapse that administrative burden, as well as guarantee that that's the payment that is, that should be transmitted.
so essentially, blockchains help to create efficiencies and reduce costs. Sounds like a win-win for everybody.
Yeah, and then for us, I'll let you guys.
Yeah, go ahead.
But the other interesting thing in medical commerce is all those payments then are attached to data.
Yeah.
Right. And then when we start moving down that data trail, which blockchain allows us to do, there are some very interesting things that I call the exhaust of this, which is population health, dynamic diagnosing, when the next pandemic hits, being able to adjust resources on demand.
Yeah.
That's the type of impactful things, Barry, that starting at the payment, we get in that.
Yeah. And I think for me, I think it's important whenever we have a conversation about anything, especially in the blockchain space, is sometimes we start to solve the problems or discuss the problems before we identify the problem, right? So we talk about payments, and I like how you described it, Barry, because you give clear examples, because sometimes people think of payments and we may be starting off this conversation on a whole different page, right? Like for me in insurance, payments, if I said to someone like, yeah, I'm building an insurance product and payments is part of it, most likely they're thinking about, I pay my premium. Mm-hmm. But they don't think about the things that Dersh mentioned with what's the cost to settle the claim? What's that payment process look like? How can we be more efficient there? We've heard this, efficient and friction, and I've coined this phrase. It's not a real word, I don't think, but frictionless.
I love that you looked to add.
I figured
I know a lot of words.
Like frictionless.
Are you like the king of Wordle?
Maybe.
I'm
I've
not-
never played it.
I'm not playing this ground.
No. So like frictionlessness, right? Like this idea that we can build, we have right now the ability to start the conversation by defining, right? Like what is a payment? Is a payment just me giving you $1, or is a payment me contributing to the profitability of a risk pool and receiving a small payment, but lots of small payments, right? So And I know Justin had something
Yeah,
too.
I mean, I guess, one comment I have on that, and I have a feeling I'm going to be the one throwing out controversial topics here, but,
Hair is bad.
friction, no, friction can be a feature, not just a bug,
Oh,
right? Because when
interesting.
you're dealing with payments, particularly in money transfer, the enemy of fraud is time.
Mm.
Because the more time that you have to evaluate something, the more data sources that you get to look at something, the more likely you are to be able to catch a fraud, right? When you're talking about instant settlement and instant finality, you've actually given the bad guys a giant advantage, because the time that you have as someone preventing the attack is now milliseconds or microseconds instead of T+3. And so-
but you could also make the argument that time frame allows for different areas of lack of a better term, hackability of that payment, right? So
I mean, but in practice, it's been more found that more money laundering gets found over that period of time than money gets stolen over that period of time as a result of having that extra delay.
What about the concept
Right,
of
and so-
artificial friction?
Yeah, well, I mean, I hear you. I'm just saying what it means is it doesn't mean we should slow down.
Right.
Right. What it means is that we need to be conscious of that, and we need to be ensuring that the tooling that we're building
Yeah.
takes into effect these new challenges.
Absolutely.
We actually need in the crypto space much more surgical tools around identity compliance and other things due to the fact that our things move much more quickly.
You're not allowed to jump to question 2.
I didn't get there. I'm not there yet.
That's a great point, though, Justin.
It is, and it does speak to where I was moving with my next question to the panel. But I think part of what you're saying too, Justin, is that when you're starting to build these applications, it's very important to look at the technology that's underlying the application that you're building on. Do you have tools by which you can, if you find an attack or you find a fraud or you find a hack occurring, that you can stop it or recover it in some fashion, freeze the protocol, whatever the case may be. And so it's very important that you look to those things. Again, a little self-promotion here. That's why you look for things that have risk-based controls at layer 1 functionality, like an Algorand would supply people with. There's my statement for the moment. So let me ask this question a bit more formally. Great news is digital payments, much more efficient. Blockchain has really helped bring this thing to the forefront. Lots of wonderful things that can get done. But of course, when you start moving into these types of new frontiers, invariably nefarious behavior starts to happen, just like you were speaking about. You have hacking, you have fraud, you have piracy and theft. So Justin and Adam in particular, because of what your businesses are aligned with, and please anyone else jump in, what are you seeing in that space? What are the things that are coming more often than not? And what are the steps that you're taking? Again, I'll start with you, Adam, because some of the ID protocols that you're engaging in are really, really neat. And so perhaps you can kind of speak to that.
Yeah, absolutely.
I'm sorry, with your insurance, and Justin, with your ID.
Yeah, no, yes,
We got it.
We got it. Yeah, we knew. We got you, Barry. I think insurance is a great jumping off point to talk about privacy data. And in insurance, there's this concept, right? All this rich data that insurance companies have, but they actually don't use it. So if you think about like filling out an application, you're giving them 100 points of data. They're just going to underwrite it with 4 or 5 or 6. So you're talk about inefficient. But there's also, from a privacy standpoint, I think, it comes back to defining, because what do I need to know about someone to know that they're an insurable interest? How much does it matter? Is there correlation? We talk about in insurance, if there's a fire in one building, the odds that it spreads to the other building, this correlation. In this Web3 decentralized world, that correlation is different. But the value that you get from the transactions and the protection of identity, like leveraging someone like Justin, who can already do that instead of me reinventing it, right? It creates this network where we all have, I don't want to say access to the data because then that sounds scary, but we all have, we're all able to lean on each other to make the system work for everybody and not just the few, right? So that's how I look at it. I think the challenges can be addressed by insurance. I think there are insurance products that don't exist in the traditional insurance marketplace now that should and will exist in the Web3 space. But it's a matter of everybody that you're hearing from today coming together and building that all together.
And so just before you go down the path of some of the things that you've built in to help address these things, I just want to follow on with what you said there about using insurance. So I think you're right. People hear insurance and they hear digital payments, and they're not really sure how to connect the two. In fact, we talked about it quite openly and honestly in this panel, like how do I connect insurance to this? But then you start to think about things like trade credit settlements and the like, and there is an insurance business to be built all around that. And then you think, okay, well, why not take that to the next level
Right.
of even day-to-day payment transactions that are occurring between people. People are concerned. We heard it in many panels before. When I hit that button and I send my algos or my USDC or my whatever to whomever, am I 100% comfortable right now that it's getting
Right.
across there? I hope I am, but if I'm not, who do I have to look to and what can I do about that? So isn't there a whole cottage industry there that could be built around that?
Yeah, I was going to say 100%, but 1,000%, because the reality is traditional insurance, because of what Dersh was talking about, traditional insurance, they have to impose minimum premiums. They have to impose, like, you know, it's got to be a year policy or a 6-month policy because they have all this overhead and expense. In this world, we don't have that. So you could, in theory, just insure a transaction.
Yeah.
Just that's it. The example I heard actually someone say was, I'm at the top of a double black diamond and I'm about to ski, and I say, yeah, actually I do want accident insurance. Like boom, and I go.
Yeah.
We have the ability to do that, and that creates stability. That helps protect liquidity and capital and all that. And that to me is the take insurance, shake it up and move it into this world, and you're going to get all the beautiful benefits of insurance without all the bogus.
Sorry to interrupt, just I know you were going down a path. I just wanted to
We're-
know what was the train of thought.
We're
Yeah.
all good. No, we're all good. I mean, you were asking about some of the unique kind of challenges and interests that come in the
Yes.
blockchain and crypto space. So the first thing I can tell you is, 90% of the clients we deal with, they don't really have a fraud problem or an attempted money laundering problem or anything like that. Many of the services we deal with, frankly, doing KYC for them is pretty boring. But for some of our clients, you end up swimming at the deepest end of the pool. The people that are trying to defraud crypto systems, either by stealing from them, stealing from their clients, laundering money through the platforms, it's great people like the Chinese mafia, the Russian mafia, state level actors who we've all heard about, and drug cartels. People that are literally professional criminal organizations where they have rooms full of people whose full-time job it is to try and figure out how to defraud these systems. These don't necessarily come up as much in a world where you have T+3 because there's time to catch those kinds of things, but they're very driven to crypto because of the borderless nature of it, the instantaneousness of it, and other things like that that give them some advantages.
And so what are you able to offer to help
Sure.
offset those?
Well, I
I
mean,
can't even list all those bad people. I don't even know that many bad people. You have a whole different realm of knowledge that I don't.
I've
Besides
got
being
some
a-
nasty
besides
emails
being
from
a-
many of them.
Yeah, besides being a wonderful speller, you seem to have a lot of connection with Costa Nostra.
I've gotten some wonderful emails from some of them. But really, it's about taking a really holistic approach to fraud and thinking about it, and sort of bringing a background of internet infrastructure security and thinking about attacks very, very broadly in the ways that things might happen. Traditional systems are very good at taking a photo and trying to understand with that photo whether or not the document in that photo is real or not. We go much beyond that in terms of was that photo actually taken by the camera that was in the person's hand? And what was how did we ensure that there was no tampering or changing throughout the process, or no opportunity for an image to ever enter our system except through the lens of the camera? And by doing things like that and other approaches, we're basically able to blunt those kinds of attacks.
Love that. That's fantastic.
I would add a little bit maybe to that too. I think what we're seeing more broadly across the crypto space is that you're right, Justin. There's people are taking advantage of the fact that it is instant settlement, and that actually makes it. When we work with law enforcement agencies, that they're not able to recover assets in a lot of cases, or it makes it very difficult, and those recoveries happen much later. And I think the benefit of all this stuff being on a verifiable public ledger is the fact that you can have improvements in tooling. We've seen with the recent Bitcoin asset recovery, the Bitfinex hack and stuff. These are things that happened years ago and are now being recovered recently within the last few months. For those unaware, basically $3.6 billion worth of Bitcoin recovered within the last few months by the FBI. I think, though, to say that, crypto is necessarily worse or better, I think what we see is we definitely see much more sophisticated attacks because of that instantaneous nature and movement. But organized crime, I think, still very much plays in the traditional banking rails because of liquidity, because they're familiar with the mechanisms for moving money around. A lot of that involves shell companies or money mules, et cetera. And that's stuff that, you may still have in crypto, but frankly, because it's a newer industry and because there isn't as much liquidity, I think we will, much like any technology, the more that it grows and gets adoption, the more, you will see in terms of, you will see more criminal activity, but on an aggregate basis compared to everything else, you're right, it's still quite small. And I think where that trade-off is, and we've been thinking about this a lot, is, what is that trade-off between financial access, privacy, and preventing criminal activity? And I think it's a really hard problem. Our thinking has been a lot less around the traditional maybe KYC mechanisms like identity verification, because for a lot of people in countries where they may not have financial access, one of the big deterrents is they either don't have the money to open a bank account and they're basically hand to mouth every day, or they don't have a digital identity that meets AML requirements today. And so, with FATF's new travel rule of basically $1,000 or less per transaction, not requiring KYC AML to the same degree as transactions above, we've been thinking a lot about how do we leverage on-chain heuristics in order to enable financial access and reduce risk. And this is new stuff that just wasn't possible because you didn't have a centralized ledger that was public that also had verifiable transactions.
Well,
Yeah,
so
we
my-
look at it. Sorry.
Yeah, if I can just jump in on that one quickly. My second controversial statement of the day is transparent
might have-
on-chain
Oh, you can't
transactions.
say that yet. It's part of our next question.
Well, but it's a bug, not a feature.
Right.
It's disguised as a feature today, but we see that actually going away on many of the main networks, specifically when they move to layer 2 protocols. So, in my opinion, actually, the fact that we had on-chain transparency was a happy accident for a period of time. But we shouldn't assume that we're going to have that kind of transparency going forward. And the tooling that we build, the tooling that we build shouldn't be centered around that, right? Tools shouldn't be actually applying, in my opinion, and we might disagree a little on this one. I don't believe that compliance should be on chain. It should be happening at the application tier, because if you do it on chain, you have to end up effectively with global policies across the entire network, where individual applications and individual use cases actually have completely different compliance needs. And so by migrating compliance into the application layer, assuming the chain isn't going to be able to provide that compliance, one, you're going to be able to do a better job over the long term. And two, we're going to be able to better protect the privacy of users that are operating on the network.
Did you want to jump on that?
Yeah, I'm not sure what but so I won't comment on that. But where we sit in mental commerce is a lot different, Barry. We see real life cases with real life people, and where is this happening? What I refer to as adversarial commerce. Give you an example. Yes, somebody's in the government employee plan. That's their health insurance. They go to a country, on vacation. They have a little heart problem. They go to the local hospital, and that hospital now calls the government of Bermuda, demands $30,000 cash on the barrelhead before they see that patient. That's a problem, right? And that's real world stuff. It's happening all over the place. So what I see
Isn't that problem exacerbated even further when they're going to take care of the guy by hook or by crook, even if the $30,000 hasn't been paid when he starts to go into heart failure. They're going to take care of him, and then he may or may not be there to pay later.
Depending on what country.
Yeah, right.
Depending on what country they put their son
Here in
to,
Bermuda, I'm
not.
fairly confident they're going to take care of him.
But so my point is that if in this area of, again, what I refer to as adversarial commerce, you have somebody, I have the money, we want the money. If we can act also as that trusted kind of escrow jurisdiction, right, that says, yes, the money is here, it is good, and we say, okay, go into the OR, we're good. And then there's a KYC that has to be done to make sure that it goes to the right person. But in that time frame, we could have saved a life. And that might be dramatic, but it's what happens.
Yeah.
And I think those are the things that we can do on chain to provide transparency and visibility, all that good stuff that we can't do in today's world.
Yeah, so, I mean, it's a really great point, George, because what you're really bringing up in you too, Justice, there's all sorts of these little dichotomies that exist in this world of digital payments and privacy. And so one that you can't avoid is this question of privacy versus transparency. We deal with it almost on a regular basis. It's at all different layers of the conversation. And it's really prevalent now where when you start to talk about blockchain in particular, because the wonderfulness of an immutable ledger is theoretically you have all the transparency you could possibly want there for your eyeballs to go back and find a year later, 2 years later, 5 years later. And at the same time, as many have said, people have a right to their own privacy, and it's demanded at certain layers and levels. And so, again, I'll turn to you first, Dersh, because being part of the healthcare industry, if there's ever an industry that is constantly battling with itself in terms of needing to supply information and at the same time having to protect information, it's the healthcare industry. But I'm sure, Eric, when you're done, Dersh, I'd love you to comment, because I know part of your mantra, like a lot of ours, is how do we bank the unbanked? And so talk to that, this idea of I've got to deal with transparency versus privacy, and how do the twain meet? Since
Mine's real easy, Barry. HIPAA.
yeah, great.
I mean, I say that kind of flippantly, but no, of course. But I think what this allows us to do is also, for the first time, because this data that's happening and this privacy that's happening is siloed off in different competing either systems, meaning the underlying like financial systems or clinical systems, electronic health record systems, right? It's also siloed off into competing forces of insurance companies, Aetna, Cigna. It's also in other competing forces between healthcare institutions in the states, Jefferson, UPenn. So I think what this gives us the ability to do too is not only to lock down from a privacy standpoint on different nodes, but also for the first time, in our area, is to build a private health record in a patient-centric way, so that it's my record, it's me, and to build that, what we refer to as a data vault around my own PHI, my own personal health information, and that is not doable in traditional legacy tech.
And so, Eric, just before you kind of maybe touch on it, what I've always found very interesting about what you just brought up, Dersh, is that you've now taken something which instinctively and inherently belongs to your data, and you've actually turned that into an asset, which then can run along digital payment rails. And so it kind of brings it all back around, which I find sort of fascinating, and one of the great use cases of this new digital world that blockchain is bringing. So again, I want to turn it back to you, Eric, because again, banking of the unbanked speaks to so many of these issues away from just healthcare. I forget the stat, but it's something like 50% of the world has a bank account, but 90% of the world has a phone. And so it makes for an interesting conversation when you start talking about connecting it for private issues and all.
Yeah, I think Dersh is right. Like what is now available with this technology, both because of the cryptography aspect of it and the fact like how you can effectively have ownership over your own identity and information, and then lease out that information to people on a more transactional basis, right? Whether that's to do KYC or augment KYC with existing companies, or whether that's to provide and grant temporary access to health information and other sorts of information. I think you're very much right. A lot of this stuff is kind of coalescing towards kind of everything becoming some form of a digital asset. The interesting thing with the unbanked aspect, like I mentioned earlier, is that one of the challenges is that they may not necessarily have a digital identity or even a physical identity to be able to gain access to the current financial system, right? And that's where I think the potential and where I see, Justin's point totally on having discrete use cases, but and I'll admit that some of this is still fairly recent thought, but one of the things that we've been thinking about is how do we enable financial access, and maybe there's a bare minimum level of financial access that doesn't require any information in order to transact other than us having some proof of humanity.
Yeah.
Whether we use proxy methods like a telephone number and email or other aspects that may not be perfect, but provide a pretty good way of having a high degree of likelihood that it's not a bot, that it is an individual, so that they can start to have financial access. Because the reality is, some of our customers already today, like the FATF travel rule of $1,000 per transaction is way overkill even for them, because they may not even have $1,000 US in an entire year, right? They're dealing with transactions that are $1.50, $2.50, $5 for the day that covers your food and daily costs. And does it make sense to put somebody, a business, through a $2.50 customer acquisition fee in order to onboard somebody like that? No.
Especially not if your gas fees are $50 to $150.
Exactly, right? So then, and then the other thing is, even if it did make sense, or even if you were, kind of forced to do that, which is kind of the world we live in a little bit today, is, does it actually provide a meaningful benefit to the individual users when you're putting them through a whole bunch of hoops they have to jump through just to be able to transact? I mean, you're just not going to get adoption of new technology when people are using cash and don't have that, right? And so I think this is what we're thinking a lot about, is like, how do we have some of this base level of functionality or even potentially thresholding on chain that enables ubiquitous access but prevents criminal activity, because it's basically would just be a pain in the butt for organized crime to do that. And then if you need to go beyond that, you go to more traditional.
Adam, I see you chomping at the
Yeah,
bit.
no, I just love what you said, Eric, because I think there's, we've seen this like in the real world, in the traditional world with like NGOs where, they're trying to give out $100, but they're spending $50 to give out 100. And they say, if someone asks for $100, why don't we just give it to them? Like, without all that. And what ends up happening is, to Dersh's point earlier with insurance, you're driving that efficiency down. And that's what I think is the most promising thing about this technology, is that we're creating opportunities for win-win-win-win-win situations, right? Like, if somebody's only in this game because they want to put money into a protocol so that they can make money, well, great. But if they do that, that also enables us to give opportunities to other people who don't exist, and then they can consensually share their data with whoever they want and be paid for consensually sharing their data.
Right.
So,
That's where it could
Again,
go,
this
right?
gets
Yeah.
pretty
But
exciting.
again,
This is back to
and I think
converting data to asset value.
yeah.
Asset value becoming something that can move much more efficiently
Yep.
in a digital landscape. And it just ties back to this whole theme that we
Yes, absolutely.
And where I was going, Barry, is what you were saying about adoption. I think we should talk about adoption, not to take your question forward, but if we talk a little bit about adoption, because I think that's key. Like you were saying, that people know how to use Venmo, but now I'm using a QR code to move things, and you're changing that mindset and that process, right? And we see that in medical commerce, but I see it in my own real world where I'm moving things into different wallets and stuff like that. So I think that's an important key. Like when you're talking about the unbanked, how are you going to get that adoption?
Well, actually, I'd like to turn that over to Justin, because
right there.
Yeah, so we've done some of that this year.
how's your thumb? How's your eyeball? Can we talk to some ways that you can justify who's on the other side of the equation there?
Yeah, a few things. One is, I think that we were involved in maybe the largest crypto financial inclusion project in the last year, which was the government of El Salvador's Chivo project. We brought over 4 million people onto that platform, less than 1 million of whom had a bank account before.
Wow.
And so, when you look at actual financial inclusion in crypto, I think it's probably the biggest piece that's actually happened to date.
Can you speak to a little bit on how you were able to do that? What was?
Perfect. I'll step into that. So, I mean, just to give a little background of that, that was the government of El Salvador's project where they're creating, one, they made Bitcoin legal tender. Two, they created a government wallet called Chivo. And three, they did a $30 airdrop to all of their citizens as a COVID stimulus.
Wow.
And so, they had a bunch of goals around it. A big one of which was actually adoption and getting people onto the platform. And so, the $30 bonus was one tool that they did to do that. But as you would imagine, when you give away free money, criminals would like to come and get more of it than they were supposed to. And so, in our case, we did use identity tools, biometrics, liveness, as well as actually a variety of other tools around actually doing some phone number work. Because one of the things that does come up is the bad guys have figured out how to get an infinite number of phone numbers. And so you've got to work around determining that, using a lot of other indicators and signals on it, but also creating an incredibly intuitive process, right? I mean, one of the things we're talking about here is, oh my God, this is such a barrier. Well, again, 3 million of the 4 million people we took through the process had never been through any KYC before. They had never opened a bank account. They didn't have an insurance account. They didn't have any of that stuff. They'd never shown someone their ID for KYC before.
And to Eric's point, because those people had no way to fill out a form that they could have answered probably 95% of those questions. You're giving a tool by which
we're
we can
giving
now
them a tool
verify
that they can get through everything
And that's
very, very quickly. and easily.
that UI piece of it, right? That is incredibly important.
Of course. Well, so that's what I was going to say. Creating an easy, intuitive user UI where you actually educate and coach people through the process. You talk to them in their native language, right? And coach them in their native language is a huge one.
Culture,
right? There's so much
language,
stuff that is done in English or is thrown through like an automated translator versus using someone that actually speaks the language to translate it and get everything correct. But then on the other side of it, they did a robust job of creating incentives to get people onto the platform. So obviously there was the initial $30 bonus, but that doesn't necessarily create ongoing activity. And so they've worked with local vendors and merchants to offer discounts if you're paying in Bitcoin. They've actually even opened up some government services around veterinary services and things like that, where if I pay in dollars, I pay with a normal vet fees. If I pay in Bitcoin, I pay in 25 cents.
Oh, wow.
And so what they've done is they've actually created a mechanism where people are super loyal about their pets, right? They're going to go back recurring and get vet services over and over again. And so they've created a recurring reason for people to go and use the service, not just to sign up. And that's something that I think many people don't think about when they're talking about adoption. They look for sign-up numbers and they don't look for activity.
Yeah, that's
And-
so super
Good point.
Thinking about how those people come back month after month after month after month so that it becomes a habit and a part of their
We
life.
say it all the time. It's all well and good to have, like Algorand has 24 million wallet users on it, but we like to look at what our transactional volume is
Sure.
on chain, because that's really
Right.
more indicative of people using the wallet.
Yep.
And you're right, it's easy to get you to sign up. It's harder to get you to use the technology thereafter.
Thinking about ongoing incentives
That's
is
a
a
great
big part of
use
it.
case. Yeah, that's-
Intuitiveness, big part of it. And then, in the case that we were on, it was obviously all over the news everywhere, right? And so there was a huge amount of public awareness about it to help drive people into the project.
So we only have about 6-7 minutes left. I'm thinking about one question that's going to be way too open, but we'll try and get through it. And then one, if we can keep our comments somewhat short. There's been others throughout the day who've talked about CBDCs and about stable coins and primitive cryptocurrencies and all. With this collective brain power that's here and thinking about just digital payments and cross-border payments and the local usages and all, and I know we don't know the right answer yet, but what's the winner? Is it stable coins? Is it a CBDC creation? Is it going to be more the Bitcoins or the algos of the world that are the winners? And just, a couple of sentences from each. Your thoughts there.
I think you're going to see all three for quite some time. We already have all three existing. China, the furthest along in their CBDC rollout, but lots of other countries around the world that have either deployed now within the last year or have worked through research and are looking to deploy. I mean, even today, executive order from Biden in the States saying that this has now become a national priority for them to look at. So I think, we're going to see all of them. I have joked internally quite a bit that, like, if nothing else comes from crypto and this tech, that Swift dies in a fire and gets replaced by something where I can at least know when somebody has received the funds would be excellent without having to call them.
It's not efficient to email them 30 times.
Right. So, I think that's the low-hanging fruit, and that's where, maybe Ripple had some good ideas and foresight, has had some challenges, bumps along the way in terms of executing on that. But I think, there's a real low-hanging fruit, which I think is probably even more likely to be adopted now that there's been a lot more institutional awareness. I think, the other stuff is CBDC and stablecoins, I think, is still kind of an open debate. Lots of stuff we talked about around privacy relates to a lot of that, I think.
Anyone else want to just quickly comment on that?
Yeah, just real quick. I mean, for me, the magic of cryptocurrency networks is not that they can be used for payments, but that they're open and permissionless networks for innovation, right? The magic of Algorand is cool, but the magic of Algorand is the things that can be built on top of it.
Yeah.
And a CDBC is never going to be a network for open and permissionless innovation. So over the long term, my belief is open permissionless innovation wins. It moves faster, it gets further, it does more interesting things than closed networks.
Yeah.
A CDBC is going to be by design a more closed network. It's not going to get to the promised land as quickly as an Algorand, an Ethereum, a Bitcoin, or someone else.
It's interesting you say
For
that.
sure.
So 99% of our want is that just like now, you go and you get your Netflix off the TV. No one has any idea that that's all happening on AWS behind the scenes. We promote Algorand for obvious reasons, but if we had our druthers, no one would know that it's happening underneath. It's
Right.
just happening.
It's happening.
underneath. We're just not there yet. I don't know if that's at the 7th or 8th inning, but we're certainly nowhere near that yet. Okay, so we only have a few minutes left. So I'm always remiss if I don't ask this question, and it's somewhat controversial, but I do it anyway, which is, we're standing here March 9th, 2022. Pick your favorite time frame. September 9th, 2022 out to, I don't know, March 9th of 2024, sometime in the next 6 to 2 years.
Ooh.
What did digital payments, what does privacy look like in your mind? 2 sentences. Start with you, Dersh, we'll go around the room.
2 sentences.
You know me, I've never had it.
By the way,
It's in the form of a haiku, please.
2 sentences.
And now I just screwed that
2
up.
sentences in Dersh world is 2.5 to 4 minutes.
2 minutes. I think in the medical space, we will have certain engagements at the enterprise level between different players that want to come into that box, right? And we'll show those kind of MVPs and then move it out to the masses. So I'm, of course, very bullish, and the tents that we've created. So yeah, 5 years out, 50% on digital.
I would say that if you're watching this recorded, just rewind and listen to what Justin said, because you summed it up so perfectly about the innovative nature of what it is. So what do I see digital payments? I see digital payments as an opportunity for people to be receiving payments at the same time they're making payments. So they're part of a system, for insurance, an example, where if they want to share their data, they're paid. If they're contributing to a risk pool, they have the opportunity to earn that money back. So it being more of a mutually beneficial, super powerful system that isn't the same one-sided approach.
So before Justin kicks in, can I kick off the word insurance DAO? Is that?
Yeah, that's it. Yeah,
Is that a fair
exactly.
statement of where
That is.
You see the insurance
Yes.
DAO sometime in the next 6 to 2 years.
Absolutely, because that's what I see the future is: communities of like-minded people with similar things they want to protect, pooling their resources together to protect them.
Got it. So democratizing the Lloyd's of London model.
Yeah, there we go.
There we go.
I'll just have you speak for me for now.
Okay, fair enough.
I mean, in my mind, I think that honestly, privacy and payments is going to get much better over the next few years. I think what we're going to see is while the base blockchains themselves will maintain transparency, a lot of transactions will actually move to layer 2 networks like Lightning and others, where transaction privacy maintains intact, although balance privacy is not necessarily intact in those systems. Because of that, you'll actually get much more privacy for individuals, because the only people that will be aware of a transaction are the actual participants in the transaction. And the regulatory requirements will get met at the application level between those peers, rather than by everybody doing analysis of the blockchain, including regulators, Facebook, Walmart, and my next door neighbor's smart kid. So, until we defeat those bugs, move everything
Little
into
Johnny's
layer
a
two.
special.
No, right. And make
That's-
those payments faster, more private, more secure. That's going to be the promised land we're going to.
Final word, Eric?
Yeah, I think I would echo what Justin was saying. I think, there's two new technologies that have kind of emerged. DeFi, what we're seeing is like with the co-location of assets in some of these larger and larger liquidity pools, it's becoming very, very hard to do accurate on-chain forensics. And so I think that's going to continue to proliferate. And so you get some natural privacy as a result of that. I think the other tech that's probably going to hit within the next 6 to 12 months at a more production deployment capacity is going to be ZK proofs, ZK snarks. And so I think some of that stuff, so zero knowledge proofs, those things coming in, I think are going to be a real shift in privacy. I think for us, one of the things that we're looking to do in Bermuda over the next 6 to 12 months is roll out digital payment solutions with a digital Bermuda dollar and potentially in, support with USDC, but enabling privately issued digital currency to be used in a production environment on a permissionless network. And I think that's a really important milestone, not only for the industry, but also for, the hope of providing better financial access and improved economic output here in Bermuda. And being able to, I think if we're able to demonstrate that here, then a lot of other locations and governments are going to take notice and look at, maybe it doesn't necessarily need to be a government driven process, that it actually could be better innovated by industry, not only quicker, but also help preserve some of these privacy aspects and meet those things that they're looking for.
Well, look, guys, first of all, thank you so much. Thank you for bringing up zero knowledge proofs. If anybody wants any more knowledge on zero knowledge proofs, the Turing Award winner in the room is Silvio Micali, who's the founder of Algorand and primarily based on his work on zero knowledge proofs. Be happy to share his white papers with you and any other information. Please just get in touch with me or anyone else at Algorand. I think we're all very fortunate that we had these four panelists with us today. What we're talking about is instrumental when you start talking about blockchain and where it's all going to. Someone said it earlier that all these different aspects that blockchain are giving us, from supply chain economics all the way out to climate controlled data points and all, at their heart, there's usually an element of finance, of payment, and something. So it's really important to understand this stuff. Do your homework if you haven't already, and reach out to any of the people here. It's all going to come back. Somehow we managed to actually avoid a deep conversation on the economic recovery or the President Biden's executive orders today. I'm very happy about that because that was a rabbit hole I didn't want to go down. So I personally want to thank Penrose. I want to thank Bermuda for allowing us to be here, giving me a forum to present you guys. You've been an amazing panel today.
Yeah, it was great.
Really super informative. So thank you.
Thank you. Yeah,
really appreciate it.
Yep. And everyone take care of your mental health.
Thanks. See ya.
Thank you.